Hello, guys, and thank you for tuning in to my channel today. I am Marie Brown, and my channel is Minds in Motion. And today we're going to go over the stock portfolio for the cash flow challenge. So, just an introduction to my portfolio. I started this portfolio on July 20th, 2019. I am using the free trading app Webull. Also, in the description below, you're going to see a link for us to both receive a free stock. And if you use that link to open a Webull account and you fund your account with $100, then we both get a free stock, and it greatly helps out the portfolio and also me with this channel. I will be adding $100 each week to this portfolio, and I am buying Dividend Aristocrat stocks. Just so that you know, I am not a professional. This is solely for entertainment purposes only. And please do your own research or seek the advice of a professional. So if you wouldn't mind, if you like the content that I have been putting on this channel, please like, subscribe, or comment. My channel, Minds in Motion, is about personal accountability, financing, investing, and just also finding purpose in life, living your best life, the strategies that are going to help you become a better version of yourself. So, first of all, I just want to talk about a strategy that I am using for this portfolio, which is the staggered dividend investing. So, dividends, especially fast-growing dividend streams, can be especially attractive way to generate cash flow. But the problem with most stocks is that they typically pay dividends quarterly, every 3 months. However, there is a way to generate dividend checks every month without owning monthly paying dividends, and that's by owning a basket of stocks that stagger the quarterly dividend payment dates. So below I have listed the payment periods. We have January, April, July, and October. Then we have February, May, August, and November. And then we have March, June, September, and December. And as you can see, if you buy stocks that pay in these periods, you would receive a quarterly dividend payment every single month. So that's my goal for this portfolio. And also in the description, I'm going to include some links to some articles that also explain staggered dividend investing a little. So the long-term advantages of dividend-paying stocks. So this is an article I found by BlackRock Financial Management. 3 key benefits to long-term investing in dividend stocks are: 1, if you're in it for the long term, dividend investments can be especially rewarding. Dividends can make up roughly 45% of your total return if you reinvest. So a total return accounts for 2 categories of return, which is the incoming interest paid by a fixed income investment, distribution, or dividend, and also the capital appreciation, which is representing the change in the market price of an asset. The next long-term advantage of dividend-paying stocks is investors who build up a portfolio of dividend-paying stocks over a long period of time should have a large number of shares by retirement age. And the more shares means more income. Over time, $50 in dividend income grows to $100, then eventually to $1,000 and beyond. It adds up, and in 10 years, you have over $10,000 in dividend income that gets rolled over into equity. This is also known as a dividend snowball. Equity represents the amount of money that would be returned to a company's shareholders if all of the assets were liquidated and all of the company's debt was paid off. The third benefit of long-term dividend investing in dividend-paying stocks is dividends are less volatile than earnings over time. The companies that offer them don't like to tell investors that they're not going to get them any longer. So the firms that tend to issue dividends, even on the lower end of the credit rating scale, are generally established, cash rich, and can ride out tough markets. So earnings typically refer to the after-tax net income, sometimes known as the bottom line or the company's profits. Earnings are the main determination of a company's share price because the earnings and the circumstances relating to them can indicate whether a business will be profitable and successful. So I also have to tell you the disadvantages of dividend investing. And this is an article by Wealthy Investors. So 3 drawbacks of dividend investing. Number 1 is dividend payments are effectively subject to being taxed twice. So the first instance of taxation occurs before you receive your dividend because the corporation issuing them from its net income has to pay tax on its annual earnings. And it's those earnings that generate the company's dividend payment. Also, the second taxation occurs when you, as an investor, must pay personal income tax on any dividends you earn over the course of a given tax year. In essence, this double taxation means that you're paying both taxes as a partial company owner and as an individual. The next drawback is changes in dividend policy. What that is a company's plan for determining its dividend amount and any potential increases based on future earnings. When a dividend paying company makes changes to its policies, particularly those that lead to cutting or eliminating payouts, it will have a negative effect on the company's stock price. If a company is forced to cut its dividends for any reason, you run the risk of not only losing your regular share income, but also your accumulated share appreciation as other investors sell and move on to other stocks. And last but not least, the third drawback of high dividend payout ratios involve a certain amount of risk. The dividend payout ratio of a company stock reflects how much its earnings are being paid out to shareholders versus how much is being kept to pay down debt, reinvest in growth, or to serve as a cash reserve. Companies want to attract and keep investors with high payouts, but retain enough of their earnings to support future expansion and their ability to raise the dividend amount at the same time. So when a company's dividend payout ratio becomes too high to sustain, it can often lead to the business having to cut or eliminate the dividend altogether. So those are just some disadvantages of dividend investing. So the next thing that I want to look at is our aristocrat stocks with ex-dividend dates this week, and that's the week of 8/19 to 8/23. And just like I told you in last week's video, that means that you must own the share before the ex-dividend date. So for ADM, the ex-dividend date is 8/21, and they're paying 35 cents per share. For AFLAC, the ex-dividend date is 8/20, and they're paying 27 cents per share. Target ex-dividend date is also 8/20, and they're paying 66 cents per share. So both of these you had to own today in order to receive this dividend payment. Johnson & Johnson, their ex-dividend date is 8/26 at 95 cents per share. And then we have SP Global, whose dividend date is also on 8/26 as well. So you have to own these 2 stocks by Friday. So let's look at this week's updates. And again, don't forget to like and subscribe to my channel. So I'm just going to go over to my portfolio, and that way we can see what our upgrades are. And what we did this week. So as you can see right here, I received my first dividend in this portfolio. It was for the amount of $1.42 on August 16, and that's for my shares of PBCT. So I received my first dividend payment of $1.42. Currently, I have invested a total of $500 into this portfolio. And let's just look at the current positions that I have. And I actually bought a couple of stocks today, which I'll go over. So I always keep all of the aristocrats on a watch list. I have 7 different watch lists up here so that I can see what's going on with each stock and what they're paying and what they're trading at, and if they're at a good value or if they've gone up. So currently today I bought 2 shares of Franklin Ben at $27.29. And then I also own 3 shares of Archer Daniels at a average price of $37.23. I also own 2 shares of Walgreens at an average price of $51.70. And then I also own 11 shares of PBCT at an average of $16.41. Now, I just want to go over a little bit of news before I end this video on the company Archer Daniels. So, this article is on Seeking Alpha, and it's in regards to Archer Daniels. It's by one of their bloggers, Dividend Ideas. And I just want to talk about this one part of the article. And he currently is not have any position in this. So right here, he says, but is the dividend safe? One of the first things I look at when evaluating the reliability of the company's dividend is the payout ratio. Unless I am looking at a REIT or a utility, I tend to be wary of any company with a ratio higher than 60 or 65%. At the present, Franklin Resources pays out roughly 38.5% of its earnings as a dividend, suggesting that the company can easily cover future payouts. While the payout has a 5-year growth at a rate of 20.3%, the payout ratio is still quite low and suggests high likelihood of future growth. Although Franklin has spent more than 100% of its net income in each of the last few years, it has done so in the calculated effort to repurchase shares. This decision only further highlights that the company's dedication to returning earnings to shareholders. Thus, the company still has a fair, robust amount of cash and cash equivalents on hand. So while Franklin's dividend is not only, while Franklin's dividend not only appears to be safe, but also growing at healthy clips, the company does not enjoy a wide competitive moat. Does not enjoy a wide competitive moat. With many competitors in the investment management space, Franklin is clearly susceptible to changing conditions in the industry as cheaper index funds and displace more expensive actively managed products. Franklin Resources has found itself struggling to compete. So yes, the dividend is safe for now and the foreseeable future, but its long-term health is dependent upon Franklin's ability to adapt to rapidly changing environments. So, being that I am a dividend investor, this stock to me was at a great value today. It does have an awesome dividend. They did just raise their dividend again, and as you can see, they have a low payout ratio. And they also have a good amount of money in cash. They have about $8.5 billion in cash. So that's why I decided to buy a couple shares of this, and based on what happens in the future on whether or not I buy more shares. And pretty much this week, I have cash reserves ready to buy whatever goes down on the dip or just whatever is a great value. And I will be watching those ex-dividend dates this week in order to pick up some more dividends in this portfolio that I'm, of course, reinvesting. So thank you for checking out my portfolio today. Again, please use the link in the description below if you are interested in starting a Webull account. And I will also leave these articles in the description below so that you can read these articles for yourself. Thank you guys so much. Happy Monday and have an amazing day.